bring you up to speed with Reliance Capital this morning. You got the earnings in profit and operational income all steady. In fact, Sam Ghosh, the CEO, joining us on that. Sam, take us through the highlights this quarter. What were the main drivers this time around?
Yes, this quarter has been quite a good quarter for Reliance Capital. The profits have grown by 10% to 235 crores. And income also has grown, coincidentally, to 2,350 crores, up 10%. And if you look at net worth, also has also increased at a similar level. Now, if you look at where the business profits have come from, our asset management business has shown a very good profit, as well as AUM growth. AUM's grown to 1,56,000 crores, nearly 24% growth in AUM. Overall, AUMs are nearly 2,56,000. That includes EPFO and the coal miners pension fund, etc. And profits are nearly at 140 crores, up nearly 10%, over 10%. And so that is one of the bigger contributors. If you look at the next business, our commercial finance business, that has shown AUM growth of nearly 22,000 crores, up nearly 18%. But profits are up at about 112 crores, up nearly 1%. The primary reason the profits haven't grown at the same rate as the AUM growth is that we have tried to increase our focus on the housing finance, whereby we have opened more branches, etc., and added more people. So that expense has come through in this quarter and will be there in the next quarter also. However, our AUM in our housing finance side has grown nearly 62% growth rate to nearly 7,000 crores. And our intention is that how we grow the housing finance AUM to about 10,000 crores by this end of this financial year. So the focus is there to grow the retail franchise. So therefore, obviously, there's a certain expense towards that.
So what's the outlook as well, Sam, for each of the businesses? In terms of the kind of growth you're looking at, profitability, just run us through the breakup.
So if you look at our asset management business, profit continues to be growing at about over 10% per quarter on quarter. For the whole year, we expect the profit to grow at least by about 15% growth rate, so we should hit over 400 crores profit in this business. That's PBT profit. PAT level will be over 500 crores. And in terms of AUM growth also, I think AUM, though it's 1,56,000 crores, we expect that by year end also should be close to about 1,60,000 crores, taking into account that the markets may have come down a bit, and hopefully, even if it stays at the same level, we should hit about 1,60,000. Because our mix of business, nearly 51,000 crores of equities are there. Balance is debt. Debt also continues to grow for us because retail debt is one key focus for us. So hopefully that should continue doing well. In terms of our other businesses, if you look at our insurance businesses, again, both the insurance businesses, our intention is that on the general insurance side, profit will grow at about 30%, though this quarter the main reason the profits were slightly down comparative to last quarters was because of the Chennai floods, but for the whole year we'll show about 30% growth in terms of profit compared to last year. And in life insurance, the profits will remain flat, primarily because surrender profits have come down. And our continued focus is that how do we improve the unit, a non-participating business, so that margins improve and therefore profits in the future start improving. In our commercial finance and housing finance, obviously focus is that how do we grow the housing finance, so therefore profitability of that business, overall profitability will go up for the whole year by about 10%. But the AUM in the housing finance, we certainly want to take it to above 10,000 crores.
You also raised about 2,800 crores via the stake sale in the last 3 months. What's the plan with those funds that have been raised, particularly over the next couple of years? Will you be using some of that to pay debt?
Yes, so our focus is how do we grow the housing finance business. Obviously, we want to take the AUM to about 10,000 crores this year, and then at least double that in the next 12 to 18 months. So therefore, that company will need capital. So part of the proceeds from the stake sales will go towards that. The balance of it will go towards repaying debt. So therefore, if you look at our net debt to equity ratio today, it's about 1.7%, very healthy. We want to bring it down to about 1.5%.
You've also acquired the mutual fund business of Goldman Sachs. You are aware that the industry has been going through some sort of consolidation. Would you also be looking at any kind of acquisitions?
See, this was the Goldman Sachs acquisition, a very strategic acquisition, primarily because they're very much in the ETF space, or majority of the funds came from the ETF space. So it normally, and they had about 60% of the market in the ETF space. So by combining their ETF business with ours, we have about 70% market share in the ETF space. Now, if you look at any mature market, I think the growth has been in the ETF space, and nearly most of the big bigger what you call asset management companies globally have about 80% of the business from ETFs. So this will give us a head start in that space once Indian investors look at ETFs in a big way. Obviously, if a similar type of deal comes along and we find that it's a good strategic fit for us, whether it's in the asset management side or housing finance or any of the other businesses, then we'll certainly look at that.
Markets these days are topsy-turvy. Sam, are you seeing, what kind of retail participation are you seeing currently?
See, if you look at on the asset management side, obviously retail equity participation continues because our SIP still continue to grow. Even in this month, it's grown. So we expect that, though it may slow down slightly, I think, based on this volatility, but however, we expect the retail participation to continue to increase. In our other businesses, be it life insurance, because we focus on traditional products, the equity markets don't have much to play on that. So customers continue to come to us on that. And on the general insurance, again, it's a risk-based approach. So we add about 10 lakh customers a month in that business.
And how do you see demand for ULIPs shaping up, particularly with the markets on a downward trajectory?
We are obviously concerned about on the ULIP front. Good thing for Reliance Life Insurance is that the 80% of the business is non-ULIP. So therefore, we are quite safeguarded from that. But if the markets continue in the choppy way it is, obviously retail customers will start thinking about whether they should surrender or not, and therefore you may see some churn. Let's wait and see what happens.
Nippon Life also upping the stake in the insurance business. Would you be selling a further stake? Are you done now with that part of those transactions?
No, see, we have on the life insurance we can go up to 49%. So obviously Nippon Life has come in. On the asset management also they wanted to go up to 49%, and we'd like to keep control over these businesses. On the general insurance side, we own 100% of the company. So we'll certainly be, and we are continuing to look for a partner on the general insurance side. So hopefully, in the next few quarters, let's see if we can complete the same.
Right, and what's the kind of growth you're expecting on the insurance front?
As I said, general insurance business, this year we expect the profit should grow by about 30% for the whole year. Though in the last quarter we only showed 5% growth, that was primarily because of the Chennai floods. But however, the previous 2 quarters we've shown about 30-40% growth in profits, and for the 4th quarter also we should be able to show a similar type of growth.
So what about the possibility of listing the life insurance business, Sam?
No, see, our intention is that we would like to hold 51% in the insurance business and have a strategic partner up to 49%, both life in general. However, if the regulator requires us to list at some point, then certainly we look at that.
Any update on the commodity exchange investment?
Yes, we have investment of up to 26% in Indian Commodities Exchange, the ICX. That exchange was dormant, but now the exchange is going to again be revived, and the board of the Commodities Exchange decided at the last board meeting that from Monday, 25th to 4th of February, they'll have a rights issue where we'll also participate. So we'd like to keep our 26% stake in it, and the intention of the Commodities Exchange is to revive the exchange and start operations from second week of April.
All right, Sam, we'll leave it there. Thanks so much for joining us.